Monday did exactly what Sunday night promised. The Iran deal opened the gates. S&P 500 ripped 1.65%. Clean. No late-day fade, no afternoon reversal, just a straight line from 7,516 to 7,554. Amplitude was 0.82%. That's not a rally. That's a freight train with no brakes. But the real action wasn't the index. It was underneath. Look, if you're new here, hit subscribe. Free note in the pinned comment. SPCX. The green shoe got exercised. Fully. All 83 million extra shares. The IPO went from $750 billion to $862 billion, the largest ever by a country mile. Net proceeds after fees, $857 billion. Here's why that matters. Green shoe full exercise means demand was through the roof. It also means the actual float is tiny, only about 4.2 to 4.9% of total shares are trading. When supply is that tight and demand is that fierce, price moves get amplified, fast. And Tuesday, options launch on SPCX. CBOE goes first. The others follow. In a stock with a float this thin, options don't just measure volatility, they create it. If call buying spikes, market makers have to buy the stock to hedge. At 4% float, that's a gamma squeeze waiting to happen. But here's the counter. Morningstar says fair value is $63. CFRA has a sell rating at 115. Paul Krugman called the whole thing a human Ponzi scheme. There's a multi-trillion-dollar gap between what the market is paying and what the fundamentals say. That gap is held together by narrative. And narrative trades are fragile. NVDA quietly put up a 3.5% day, closed at 212.45, and then after the bell, announced a 5-year first, a $25 billion bond issue. Demand hit $85 billion in orders. That's 3.4 times oversubscribed. Jensen Huang says the chip shortage isn't going anywhere. It'll keep going for several more years. Downturn NVDA at 212 is still 14% off its May high of 236. Bond demand at 3.4x says the smart money isn't walking away from the AI trade. They're just repositioning. Tuesday, 2 things matter. 1. SPCX options. Watch the implied volatility at the open. If it prints above 60%, the gamma squeeze narrative gets traction. If it's below 40%, the option market doesn't believe the hype. 2. Pre-FOMC positioning. Warsh speaks tomorrow. Nobody knows his tone. The market is 98.5% priced for no move. But that's just the rate. The dot plot, the language, the press conference, those are the variables. And traders hate variables. Then Thursday. Triple witching. Quadrillions in options and futures expiring. On a week that's already compressed by Friday's Juneteenth holiday. This is not a normal Tuesday through Thursday. One question. SPCX options. You buying calls on the gamma squeeze or staying out? Drop it in the comments. Monday was the easy day. Iran deal. Gap up, done. Tuesday through Thursday is the hard part. SPCX options. FOMC. Triple witching in a 3-day window. If you're positioned, you know why. If you're not, maybe that's fine. If you made it this far, you know the drill. Subscribe, hit the bell. Free note in the pinned comment. Stay sharp.